Hi everyone, it's Stuart here. Hope you're well. It's where are we? It's Thursday. It's the 18th of June, and we just had the announcement an hour or so ago from the Bank of England to increase QE for the UK by another additional £100 billion. It's really what the market was expecting, but there was also a hint of expectation of that not being enough. That sterling had fallen quite significantly this morning, under 125 against the dollar, and euro pound had gone over over 9.90. It reacted very positively on the confirmation of the 100 billion, but also that the vote was actually split. That was a bit of a surprise. Andy Haldane, who's the chief economist within the Bank of England, set up on the Monetary Policy Committee, voted against this additional 100 billion pounds. They all of stimulus. They also talked about extending it to, or it should be done or complete by the end of the year. So that was probably the big fillip that sterling got as it rallied significantly from this big sell-off it had. Excuse me. Good afternoon, everybody. Hope you're well. Obviously, it's connecting okay. The picture doesn't look very good from here, but I must have a sticky internet this afternoon. Still working from home at the moment. What was I saying? Yes, the situation was deemed a bit more positive than perhaps the market had been anticipating this morning. So talk of negative interest rates also disappeared. It didn't come up in the statement today. I haven't actually seen the details of it, to be honest, in the last hour or so. But let's have a look at the charts. As usual with these situations, please put on something you'd like us to have a look at. Franklin's the first one. He's talking about asking to have a look at dollar yen. So I'll just get rid of my ugly mug and we'll put up the charts. Just bear with me a second, and we'll be with you in a minute. There we go. So hopefully you can still hear me loud and clear. So dollar yen, says Frank. Let's start with the 1 hour chart, frankly. I don't know what time frame you're interested in, but let's have a look. So dollar yen here, been tracking. Let's just actually go to the daily chart, see where we were. So this is the 1 hour chart, but this is the daily candle patterns, okay? So there's lots of detail on here, so it may look a little messy. A week or so ago, we were all the way up here. Let me zoom that up a bit. We were all the way up here at 109.50. We come crashing down quite significantly last week, and we've bumped in all the way down to 107. So a 250 pip fall here last week. This week we're bouncing around 107 basically. We've bounced off it a couple of times from this rally here we had on Thursday. So still short here on this crossing moving average strategy on the daily time frame, which is moving down quite significantly. So 107 is the daily support here. And then there's a key Fibonacci level there. Again, I don't know where it's come from. Doesn't really matter. It's still going to play a part there at 106.37, where S3 for the day sits as well. And then another extended Fibonacci level. And we have to get rid of some of these. 106.25. So there's clearly a bit of support there. 106.30, 106.25 on the daily time frame for the dollar yen. So there we go. We've been sliding sideways this week. So let's go down to the lower time range. 4 hour time frame, again, drifting sideways, moving down and drifting sideways as we remain capped at a key resistance level for 107.65. So he has remained capped from previous charts on the higher time frame. Very much a key resistance, and we've seen that all this really since the 12th of June, all this month. So drifting down, S2 on the 4 hours there is 106.65, and again another one that's short. The 1 hour time frame moved down earlier into S1 today, 107, 106.80, so obviously much closer to that 107 line, Franklin. Then rallied to 107 this morning. Looked like we were going to go long. Ran to the pivot point here, 107.12, and then we've moved back down again here in the last hour. So the 2 till 3 candle here on the chart has returned to a down move. So next level, if this continues to unwind down, key support for the day there, 106.80 to the downside, frankly, on that intraday chart. But as you can see, let's zoom this in a wee bit. As you can see, the trend has sort of unwound, as we talked about earlier, on high time as we've moved back down. So today. If that breaks, it's already broken once today and it's held. So chances of that happening are great. But there we are, 106.36. We've rallied up, fast moving stochastics, and moved into an overbought condition, then moved back down on this 1 hour time frame. Interestingly, the RSI here, set at 14, is still ticking up to 42, so it's really neutral. It's not really giving us much direction here. The MACD remains on the signal line, remains under 0 and has done all day today. The histogram now is short of the signal line. Let me just bring that up a bit. There we go. Signal line beyond the histogram at the moment, so it's weakness, but we'll still move down, retrace, and then move back down. Okay, so there we go. So that short-term time frame keeps moving down. Now then, lots of questions coming in, as ever. Lots of characters trying to spam us, but that's life, my friend. The very best. I'm not saying the best of luck to you because you don't deserve it, man, friend. Next question was Flip, and any update on gold? Well, gold's been really sort of sliding sideways. Got a bit of a bid, quite a significant bid yesterday, and again this morning it's had a bit of a flip. Let's go to the daily time frame. So again, the daily time frame remains sort of quite a wide channel. So I've said this for a long time now. Basically, all of April, all of May, and here we are into the third week of June. And we're still sort of in this channel. The top of the channel is the peak was at 1763. Our technical peak now is at 1745 with the floor at 1685. It's 38.2 fib level. But within that, we've got some key levels. Within that, we've got the psychological 1700, which we've held. Again, as you can see that. Where's my little plus button? Let me zoom that in a bit. As you can see, we've held that for the best part of the second half of June at the moment. The key 1700 level, it's the daily time frame, remember. We can't break over the 1745 level here. So the main pivot in between those two is this key 1725 level here. So 1745, 1725, and 1700, the big psychological level for me. Beyond that are the lows and highs at 1685 and 1765. So that's the parameters we're playing in. It's sliding sideways, so oscillating. They're the indicators that will help you. For daily, still doing the same thing. Let's say we had a good day yesterday, so let's go down a time frame. 4 hour, again, not much action, supported by the 200-hour breach. The 200 period breach that we had here on the 9th, and we've sort of held it since. 2 candles under there, 1 candle under yesterday. So drifting down, but really you see some very much sideways action here for 4 hour traders. Again, no trend, so trend to stay away from that one. 1 hour, a bit more action, but again, a bit choppy and really channeling sideways, as I've just said. See all these fractal highs here, fractal lows. So again, if you're trading this on the 1 hour time frame, watch the 200 hour as your support. We're heading into it at the moment. We've had a weak day so far for the gold. We've had tried to rally above 1730. It didn't hang out. We broke back under 1725, a key daily pivot area. We're under our daily pivot area here that sits at 1725 at the moment and running into support here at the 200 hour. That breach is that energy continues to move down. We'll certainly have a test of S1 and yesterday's low down here around the 1710 level for gold intraday Flip. So best of luck, my friend. Princess, hello. Hope you're well. Khalid, hello. Hope you're all well as well. Let's have a look. Anybody request anything? Just say hello to everybody. Lots of people in here at the moment. Very good. Very good. Lots of people repeating themselves. That's fair enough. Nobody's asking for anything else in particular. Okay, so we're 10 past the hour now. Just remember that at the bottom of the hour, we've got the key jobs number, the weekly unemployment claims from the United States. But let me just recap the case in the, let's go back to the pound, the cable rate today. Big expectation, or not big expectation, that's not true. Let me just rephrase that. So, again, let's just get this in perspective. Sterling had this is a daily chart for cable, dollar. We've had a strong run up here from The end of May here, we ran up, went to 127, attempted 128, we couldn't hold 128, and then since about the middle of June, we've sort of started to slip again. So big sell-off here on the 11th. We followed through the following day, retraced and followed through again, and now we're having a quite significant sell today, as you might expect, in anticipation of perhaps the Bank of England disappointing or wherever we are. But so that's where we are. We've had a run up and a run down, basically. So sterling's in the crosshairs. It's got the added situation of the Brexit situation that's very much priced in. Some of the official talks didn't progress, but this week there's been some positive talks outside the talks, both sides saying positive things. The UK's about fisheries and the EU talking about their level playing field. Maybe not too level, but anyway. Let's drill down to the time frames we're talking about. So today, again, we went sideways in anticipation of this overnight. This morning we started to move down. Triggered lower here this morning at 11 o'clock. 11 o'clock? Yeah, 11 o'clock server time. It moved. It just wasn't breaking the pivot point. Moved down significantly under the previous lows from overnight and yesterday, and that triggered low here, and it's moved down. Big reaction as the news came out. We rallied. We were down all the way down here at 124.25 at one point, and we've gone even. No, this hour, isn't it? Hang on a minute. No, it was this hour. Sorry. And we rallied to 125.25, and then 125.50 at one in the immediate aftermath. But then we've moved down. So if I roll this into the lower time frame, you see the reaction of the Bank of England, relatively positive, but again, we've turned negative. And this is all to do with really this continuing thought that the 100 million, although it was what the bank was delivering, didn't really come up. Lots of people saying it's not going to be big enough. So sterling continues to unwind. So again, if you've been trading this, obviously with a trailing stop, you'd have probably got spiked out if you were too close. But do you trade these things on these 1 hour time frames when you've got such a big announcement coming up? That's obviously the other thing. The techniques of trading the news and managing the news is very much a technique to learn. And we've got lots of webinars on such a thing. So the trend remains, that was the Bank of England announcement, fairly relatively positive with this the chief economist dissenting, but we've continued our decline today. So again, obviously, it might not be sterling weakness, might be some positive dollar news as we await the jobs news in about 15 minutes now. So sterling continues its decline today, 124.64, and the trend remains very much set. And again, with this strategy, again, if you had your stop loss fixed, it's difficult. You would have been stopped out because obviously this spike. But as you can see, the candles, the candle hasn't closed back over the 9-period moving average, and that's really our trending. That's our main get out where you're moving your stop loss down. But it's obviously if you moved your stop loss to trail it down as the trend unwound today, you would have been spiked out on the volatility of the news. Or, don't get too greedy. You might have got out earlier as we broke under 125. That might have been a big enough move for you on the day ahead of the big announcement at the Bank of England. Or you just, it might be automated, so it's set that you leave your stop loss up where it was where you got in, which is basically the turn of the market, because that's what we do with these trend following strategies. Or again, you could have just set your initial target of a couple of it, the ATR times 1 and a bit, and then second target 3 times the ATR or 2.5 times the ATR, and sit and wait and see where to get hit, and leave your stop loss up, as I say, up here when you first open the market. So if you'd done that, you'd have still been short on this baby, and it's still moving down. MACD looking very, very strong here on this 30-minute time frame. So anyway, I've sort of diverged what we want to talk about today. Flip is asking, is Apple a good buy to 370? Well, I've always admired Apple. Everybody knows Apple globally. It's one of the most recognised brands in the world. Iconic leader that left and came back. Obviously, sadly died, unfortunately. But big rally in Apple prices, along with everybody else, down here mid the end of March, all the way down to $212 here on the 23rd. So immediately struggled to get through 250, but it's rallied ever since. Again, another one, follow the trend, really, ladies and gentlemen, as with any. So here it broke the 20-day moving average. All those of you that listen to me and follow me, the 20-day moving average is one of my favourite moving averages. It has one of the indicators has not pretty. It's a late mover, but that was pretty early mover here. So we brought the 20-day moving average here back on the 4th of April. Really, trend flows have just kept adding to their positions or trended their position up and, watched it move in. Next big leg was this break of the 50 period here. I'll get to your question in a minute, Flip. Don't worry. Was the big break here of the 50-day moving average. Then we broke $300 at the beginning of May, and May has been a strong month, very, very strong month for the equity markets, driven by the tech companies, and June has followed through as well. Unusual, but it doesn't matter. The trend is up. So where are we now? Well, we're trading at 350, 354 a couple of days ago. Your question is 370 out of the question? It's certainly not out of the question. The trend keeps going. Earlier this week, two key analysts that look at the Apple stock, Citi, big, obviously one of the major Wall Street banks, increased their target to $400 on Citi, and Wedbush, another key analyst, increased their target to $425. Two bullish announcements just this week, but obviously there's other analysts aren't as bullish on Apple, so check them out. Do your own research, Flip. But yeah, the trend here certainly on the daily time frame remains very strong. We're supported by the parabolic SAR. With the fractal highs just keep getting higher. We're at all-time highs again. We go to the weekly time frame. What a very, very strong recovery the weekly's had as well, breaking over new all-time highs here at this 330 level and moving up. So do you buy at this level? I mean, that's the other thing. Lots of people, there's a mantra that it's too high to buy. But if you read lots of trading books, lots of people say it's never too high to buy, it's never too low to sell. Trends tend to keep going, and that's what's happening, and that's clearly what's happened here. You can see it here. If you bought here as a weekly trader on the break of the 20 period moving average, again, you're still long, but you didn't get until $300 mark. A strong week, indeed it was, and again that's ran off through new all-time highs and kept going. MACD looks technically positive. This RSI was way overbought here as it got up there. It shook out very aggressively. Didn't get oversold, interestingly, and then we bounced in a bit of a whoosh shape here. Interesting on the weekly chart on the RSI. So it's still going up, but we're now approaching back into the overbought zone. But look how overbought we were as we were moving up here and also here before we came down. So still legs in that looks technically and sentimentally, but obviously lots of things driving markets at the moment. One is this condition about the second wave of the coronavirus, how infectious it's going to be. It's obviously spiked in places like Florida and Texas in the United States. Big problems in Latin America, particularly Brazil and Peru. Peru's overtaken Italy today, unfortunately, for deaths and cases, and it's obviously not going away. So it's something that's concerning the world and the world economy as well, which is why we're seeing all this stimulus, all this cheap money from central banks and governments applying the fiscal money pile as well. So Apple, has launched a cheap cut-down version of the SE version of the Apple 11 in the middle of the pandemic, which everybody thought was crazy, a cut-price one, but it's done very well, and it's Apple stock continues to accrue. The monthly chart also, 3 strong months here as this moved up. It's an interesting one, isn't it? This is when we hit this huge candle here back in April 2014. I don't often look at this chart or show you this chart, but this is when the stock went from for each one stock that you held in Amazon, you were in Apple, you were given 7 basically. So it was a 7-to-1 stock split, and this is when the price was all the way up here at $700. back in 2012 and 2013 as well. So crashed all the way down, relatively crashed all the way down here, but we were at 75 pence, and here we are at 350 pence. So over the last few years, Amazon, I keep saying Amazon, Apple has been a tremendous investment if you've managed to hold on for the ups and downs in that stock. But obviously this is a monthly chart, so just put that as a point of interest more than anything. But there we go. Yeah, Flip, Apple remains strong and big by the looks of this technically. I mean, the only caveat here, the daily, the parabolic starts flipped here to the downside after this move down here last week. But now it's today, it looks like it doesn't, obviously not complete, so it's flipped. But that's what the parabolic SAR does sometimes. The trend remains very, very strong. Nicely aligned, 20-day moving average, 50-day moving average, and the 200-day moving, all nicely aligned. To the upside, right, I think that's enough about Apple, isn't it, Flip? I hope you don't mind. There's loads of spam coming in. It annoys me, spam. But anyway, Jasper and others, please, keep it to the subjects we're talking about. Samadhi, gold sell. Well, what's your time frame, Samadhi, my friend? We've just looked at gold a minute ago. It seems like a minute ago. It's probably longer than that. But you're really channel bound, not going on. Big move here today as we rallied up to 1733 and R1, and we sold off. It's moving down. We're under the pivot point, certainly. The 1 hour moving average. The 200 hour. Intraday moving average has been tested once and now twice today. So, yeah, that's certainly, I wouldn't argue with it. That's certainly moving down. Looked like we're moving up. Then it triggered shorter here, although the moving average hadn't actually crossed at that point. So, it was a bit woolly, and then it retraced. So, would you have taken? You might have only confirmed your take here on this move here back under 1725 and not 1 hour time frame, but certainly a choppy day overall. So it's a bit volatile, but gold can do that. That's the nature of the beast. But as you can see here, Monday, Tuesday, and Wednesday, we're really sort of pivoting through this key 1725. Obviously, we moved down and up above that, but here, that's provided our support most of the week, and we're testing it again now. Gold here. So gold, yeah, I understand where you're coming from if you're on a short position on gold, my friend. Lucky, hello. My friend, hello. Flip, dollar CAD. Certainly, sir. You seem to be on it's asking questions today. I don't mind at all. You either get days where lots of people ask or nobody asks. So you do what you will. So, Flip, dollar CAD, where are we? Well, again, let's take it back to the daily time frame. Another one that is really trending lower still, isn't it? Let's, again, zoom this one up. You can't really argue with that, can you? We're in this channel again. Actually, let's zoom that up. Probably see the story. So again, this is takes us back to April. So April, May, very much channel bound. Relatively tight channel. We had 141 our top. We did drift to 142, and then our floor was through here at 139. So we had a 200 pip channel we were bouncing around, pushing out at the bottom of, out the top of in April. Didn't try that in May, which is a suggestion maybe. The highs were getting lower. The lows hadn't actually broken lower, so that was a descending flat bottom triangle there, which finally broke significantly out under 139. A significant candle here on the 26th. Was it 26th or 25th? Yeah, 26th of May was that big breakout. Earlier, this strategy here had triggered short again. Obviously, it'd been chopping around a bit, so it wasn't successful. But we had a last initial short that's proved successful here back a week early on the 18th. So it broke. Moving average were aligned lowers. We got the 20, the 5, the 9, all moving down, and now we've just trended lower ever since. So it's been a nice move. Additional entry there at the beginning of June as we broke under the 200-day moving average. This is, remember, not the 200 hours. So big coincidence move. We've moved down. We've retraced that. So again, you may have closed that now with that big candle there on the 11th. But so far, we're still capped under the 20-day moving average. So we've been under our 20-day moving average here, dollar CAD, for now 22 trading days into our 23rd trading day under the key 20-day moving average. So that, for me, my friend, remains short on the daily time frame. Going down the time frames, the 4-hour time frame, had a spike up earlier in the week. On last week, that was the 10th. We spiked up, and then we again another one that's moved lower here last week. Here, that was our move lower there, 16.31, I should say. But we've seen clearly this week we've got a floor here at 135.20 is held here really. For the 4-hour traders, the S1, the daily S1 is that key level where we are today, and we bounced off it earlier. Sorry, rode into it earlier, bounced off it just now. So again, but it's, you know, again, you can see the highs getting, it's not really trending there. But the fractals, these little arrows here, you can see they're getting lower. And that floor here of the 4-hour traders need to break that 135.20. Certainly the 135 level is key. And the 134.85 is a key level we've been spinning through as well. So 1-hour trade here moving down. But again, we got lots of data today. We got the American unemployment in a minute. I'm just going to have a look at that in a minute. And we've also got the ADP out of oops, where's my let me find the calendar out of Canada later on as well. So yeah, claims expected to come in at 1.3 million. Better than last week where we were still over 1.5 million. That's a big psychological level. This will be our 12th week down. I'm trying to put a positive spin on the unemployment claim at the US. It'll be a 12th week down, but remember we were at 6.5 million at one point in the middle of March. So over 44 million Americans have lost their jobs. Remember, I had that big surprise of 2.5 million jobs created in May from the NFP. There's lots of anecdotal evidence as well of lots of false claims. I've just got a few cousins and relatives in the US all saying with friends and themselves getting, you know, claims from people using their names and their employment tickets as to claim unemployment. So it's a bit of a mess in the States, but we'll see what the unemployment claims are like at the moment. As far as the Canadian data that's coming out today, we got the ADP employment change expected to fall by 280,000. Wholesale data, housing data as well. So big clump of American and Canadian data about to hit the screen. So obviously watch this one. This is dollar CAD. So let's zoom into our little old 5-minute chart. So we've been moving up here, dollar CAD intraday, obviously today strongly here on the 5-minute chart. 15-minute chart also looking relatively bullish. Continue to move up, so dollar up against the dollar, the Canadian dollar here. Where 15-minute traders would have went long there at 2 o'clock and have been long since over the 200 period moving average there, moving up. Top of the Bollinger Bands at next resistance 135.70 are 15-minute traders. 30-minute traders, they also went long in the last half hour here at 3:30, and it looks like the data's pretty positive for the US dollar. We're over the pivot point here on 15-minute and over the 200 period. The 1-hour traders, again, just triggering long now, having been short this morning. That's looking to move long. Let's have a look at what the data says. I don't know if anybody's seen it yet. Let's have a look. Data, US data, Canadian data. So let's just go through this again. So the claims are actually worse than expected. Worse than expected. They've come in again at stubbornly won't go under 1.5 million. So it's just over 1.5 million claims this week. New claims. This is week beginning the 12th of June. Remember, and you know we're going all the way back to the end of March. You know, 12, 11 weeks. This has been hideous. We're into 45 million new unemployed people in the United States, or claims they are. Certainly, the bulk of that will be legitimate. And also, the other stick in the mud is the fact that the continuing claims has actually gone back over the 20 million numbers. The continuing claims came at 20 million and 500,000, back up again. Big positive for US data, which is probably why the dollar has moved up here against the CAD. It's a combination of a big positive Philly Fed index. The Philadelphia Federal Manufacturing Survey used to be a very, very key piece of data that came out. Actually, let me see. I'll share my. I'm just talking to myself on it. So So that's come out very positive. So stop sharing my screen. Let's share the screen. Let's just share the application with that one. Share. Okay, there we go. So you can see the calendar what I'm talking about now. We'll come back to the chart in a minute. So this is the data I'm just on now. It's just broken in the last minute or two. So the jobs data, as you can see here, hopefully, is worse than expected. Can I zoom that in a bit? Okay. So it's coming at 1.5 million here, this number here. The continuing claims are also worse than expected. It's back over the key psychological 20 million. So the continuing claims in the US, 20 million US workers continuing to claim unemployment over a 4-week period. The 4-week trend average of the new claims is now, previously it was just over 2 million. It's now 2,800,000. So it's gone up 80,000. It's gone up significantly, and the 4-week claim is now actually down to 1.77 million. The 4-week trend, so it's come down quite significantly, but it went up. Remember, hugely. 6.5 million 1 week we had new claims out in America. Thing that's helped the dollar CAD pair we were just looking at there for Flip is the fact that the Canadian data is quite weak as well. We've got unemployment claims. The wholesale data has slipped to minus 21%. Housing data has actually held up a tad better than expected, but the price, the inflation area, the new housing price indexes slipped a tad as well. So overall, that's more probably beneficial. Well, it's neither good for either of those currencies, but the Philly Fed number is quite a significant step up for the US market. So let's just bring our charts back in, and let's just. Oops. So change screen. So we'll bring the charts back in. So that's the dollar CAD, my friend. So picking up here in this 1 hour, 135.75. Here on the 1 hour time frame, resistance was from earlier today when we got to 135.90 on the close of the hour, and the top of the Bollinger Band and R1 we spiked to as well. So 136. Isn't out of the question today. As you can see, we're still really very much channel bound for dollar CAD. No problem, my friend. Who's next? Can't I see an event? Somebody's saying great. Okay, no more requests come in. Hopefully, we're still connected. Other people are bringing in other people. Okay, let's see if I've missed anything. No, Flip was asking about Apple. Flip, my friend, you're the only one that's really asked me to have a look at anything today. Everybody else, I must be boring. Silly. Let's double check. I haven't seen anything. Oh, synthetic indexes. Take synthetic indexes away, Mr. Binary Forex. Your VIX 75. We should have an open discussion about it. New messages. Let's have a look. Jasmine, hello. Anything you want me to have a look at, my friend? Let me know. That's what we're here for. We've done the news, really. Big news today has been the Bank of England giving an additional 100 billion pounds to the UK economy. My mouth is going. Let me have a quick drink. Economy. Some surprises in there. The 100 million was expected. Many were saying it's not going to be enough in the long term. Big surprise was the chief economist of the Bank of England, Andy Haldane, actually voted against the extra 100 billion stimulus. So that's brought it to 740 billion. That's an extra 300 billion pounds being added to the UK economy via the Bank of England since the pandemic struck. No change in interest rates, 0.1%. No talk of negative interest rates either, so that's helped the sterling initially. So this expansion is now going from the end of July to the end of the year. This extra 100 billion will be spread out over that. So, and also the bank saying they're ready to increase the pace of purchases. So again, they're saying their pockets aren't empty, their toolbox isn't empty. No talk of negative interest rates today, but that still hasn't been ruled out. So Big issue remains obviously the sluggish economy, and particularly as one of my big beefs is the unemployment rate as well. Will take some time to recover, was the phrase within the statement there, and inflation will continue to move lower, one would expect, in the UK. So pressure on sterling going forward. So, guys, anything you want me to have a look at? Anything you want to have a look at? Any opinions you want? Please, that's all it is. It's all that moves markets. Technical analysis, sentiment, fundamentals. But always with trading, have a system, trade your system. Accept you lose a lot in this business because that's what you do. And keep those losing trades small. You live to fight another day. Lose too much and you're out of business very quickly in this business because it's pretty ruthless, or can seem pretty loose. You've got to get rid of your emotions, get rid of your ego. Trade what you see, as they say. Have a system, follow your system, and bag your profits. And accept that losing happens a lot. It's just one of those things, chaps, ladies, that happens in the trading marketplace. So let's just go back through the majors then. So Euro here on the 1 hour, pivoting through 112.40 today. Nothing really exciting moving here. The Euro, that's a horrible chart, isn't it? We've capped into, well, I'm saying that, draw my eye to the 50. The purple line here is the 50 period moving area. We're just capped at 112.53 today. Haven't moved above that. A big down candle here, big positive candle for the dollar, negative candle for the euro. Back under 112.40 and moving lower. So we're under R2, R3. It's interesting where that is. Is that correct? S1 now sits here at 112 itself, but again, not a great deal more data to drive that one forward. At last, somebody's asked for something we haven't looked at yet. Emmanuel, pound against the yen, the notorious Widowmaker pair. Called the Widowmaker because it has made many widows of its people trying to trade it. Big pip move, it's intraday and on a daily basis. Spread can be wide, one of the widest of the main crosses that's traded by in big volumes. So be careful with it. But clearly, you can see what's going on there, can't you? Since the beginning of the week, even a little 5-year-old that's just gone back to school can see that that's in a downtrend. If you can't see that that's in a downtrend, go and do something else, ladies and gentlemen. But clearly, old downtrend, big sell candle was here on Monday. Well, that was the first announcement. Obviously, at this point here on Monday, 5 o'clock, Monday, closing my day, or closing the end of my day. Look, it's had a good day, hasn't it? Didn't know that was going to happen in the next hour, but that had already triggered short here, and it's continued to short through into the end of Monday, down Tuesday. Sorry, I'm not talking about Monday, I'm talking about Tuesday. Monday was a good day. This is the 16th, Tuesday, not Monday. So that was the last big short, and that's been short since Tuesday. So through Wednesday, through Thursday, and it's moved lower again. So all the way up here. And Monday was a good day, in fact. Monday, Tuesday, we rallied to 136.30, gave up the ghost quite significantly into the close on Tuesday, and then moving under the key 135 again. Fives and zeros constantly, and numbers that prices tend to get drawn to because it is a psychological business, it's trading business. Moved down again into close on yesterday, Wednesday, and Thursday. We've moved down as the anticipation of the Bank of England and post Bank of England. So see how, let me zoom this up again. See how the volatility, the relatively bounce we had on the 100 billion being announced and confirming market expectations, but as I said before, and since markets were expecting, the real market was perhaps expecting a little bit more, and the fact that Andy Haldane didn't even want to go that far, so is the dissension within the bank. So that's uncertainty. So we come down. So it's added to the bid of the safe haven of the Japanese yen. So we're under S2 today and continuing to trail lower. Here. So I don't know what time you're interested in, Emmanuel, but certainly that 1 hour has been short from this morning. Closed out. You could have gone short there. You would have probably taken out with the volatility of the announcement. But what you could have done, wait till the news had calmed, which is what most traders do, and then gone short again here, which is what's happened here. as we've moved lower today. So 4-hour traders, again, they would have been short. No, not there. They would have been come short here. Not a great entry there. Having gone long here. But that would have been your confirmation entry there. 8 o'clock on the 17th, so 8 o'clock yesterday morning. 4-hour traders been short here. Stop loss up there, trailing lower, and off we go into 133.23 now, under 134. So that's continuing to trend lower. The daily time frame again, similar. We've seen this on a lot of these sterling cross. Sterling got a bit rallied up into the end of May and into the beginning of June. So here, even pound yen went over its 200-day move. That was something very positive at this point. Just goes to show, doesn't it? That's a very positive run, but we ran out of steam, and that was again first indication that was going shorter to the downside on the daily basis. Only yesterday, interestingly, did it break the 20-day moving average, so it's still trending up. But you can see the faster moving 5 and 9 EMA here turned much earlier, and now we're finally under the 20-day moving average yesterday, and the leg down. You see the gap from yesterday's close to today's open. That's significant as well. Moving down and moving down again. So under the 20-day moving average for the first time. Pound sterling, pound yen. What am I talking about? For 15 days, and the rally, lasted 8, 10. Really, 10 days before it ran out of steam. So that was a suggestion to get out of that long, certainly. Only short here, according to this strategy. So again, showing the lagginess of using moving average sometimes. But so they're all short. Those key timeframes there, Emmanuel. I don't know what time frame you're trading, but certainly short. Next up. Hope that answered your question, sir. Please let me know if it didn't. If you want a bit more detail, let me have a look. Who was next? Hanif was next. No, have we lost the internet? Hanif, there we are. It was just slow. So pound Aussie. So let's have a look at another different profile with pound Aussie. We look at our daily profile for pound Aussie. It'll be a very similar sort of move. That's pound Swiss, pound Aussie, my friend. So here, again, you don't need to be a trader to see that that's going down. As I say, I don't mean to be rude, but hopefully 3 and 5-year-olds could see that that's going down, isn't it? See the big fat yellow line at 2 here, going up. It was quite nice, but that was our resistance. And then when we broke back through it here, so pound Aussie has been short under its 20-day moving average since you might not going to believe this, the 7th of April. So we've got April, May, and all of June so far. Pound Aussie short. Have you got the patience and the discipline to hang on for a trade that long if you're trading at the end of the day? That's a question you need to ask yourself, Would you have panicked? Would you have got out? Most people would have done. Most people would have taken some profit. But the trend is still very much set. And it's a classic, one of those things you see in the textbooks, isn't it? But this is real life. You could draw this. I haven't got a pen on me, so I can't draw it. But, you can see, let me just put the crosshairs on. You can see. So that, we'd had a nice up run. That was a first sign here that a couple of things going on. We were under 2 that day, and we closed on the 20-day moving average. We'd done it a few times here, hadn't we? But it turned around against us. We tried to go short there, went back over 2, and it rallied again. Another final buying burst. So here, there's resistance here at 1011 here. You can see why all these spikes are here. Big spike here as well, all the way up there. Big wick here. So lots of volatility here in the chaos that was March. But again, look, the chart tells you the story. So broke 2, the resistance at 2.01115 finally broke on that short beam. So we're up, but then it was the last buyers, the last people getting in here. The fear of missing out crew got to get in, panicked. and then panicked as they've sold off. But that trend has just unwound. So first day under the 20-day moving average. 3 days later, we broke the 50-day moving average for the first time in yonks. Look, all the way back there. So that was a significant sellers adding to this trend. And it's just, retrace a tad, down, retrace, down again. And where did it stall? 200-day moving average this time. Guys, we don't make this up. This is running. This is trend following analysis, trend following markets. Classic, absolute classic. From these highs in March to these lows where we are now in June. So again, look at it. You could draw the lines, couldn't you? Down, bit of a retrace, down, bit of a retrace. Another big down when we second break of the 200-day moving average and ran and down again. Parabolic starts flipping as we go down and then up, down again up. But all this time, we're under the 20-day moving average. We're under the 50-day moving average. The 20-day moving average moves under the 50-day moving average. So we've got momentum moving down. Here we've got the MACD moving down as we've moved down. And MACD signal line doesn't break the zero line right until here, right until, where are we? The 20th of April. Our first indicator on the slow moving, whenever we say the slow moving 20-day moving average, was all the way back here on the 7th of April. So that was that. That gained momentum. The histogram moved over our signal line. The signal line, the degree of the angle started to accelerate. We ran into the 200-day, bounced up a bit, didn't break the 50. Chances to, people say, well, we have one. But again, where do we bounce off? Well, we bounce off 109.00, the 200-day moving average. You're probably know all this story, Hanif, but this is how trends build, and this is how you make massive profits, big profits, just by having some patience, just by having some discipline, and just by following the trends and sticking to the trends and not getting shaken out, not getting panicked out. Okay, so the trend continues. So let's bring it bang up to date. So that was April, that was May. Thank you very much. Are we still in it? Well, you're taking profits along the way, but what we're saying now, well, looks like we may have, the steam, the energy, the momentum may have run out. And that is sort of what our technical indicators are perhaps suggesting, but don't panic. We've bottomed here in the MACD. The signal line now is underneath the histogram chart, the histogram columns here, because we've sort of flattened out. The momentum has slowed down. We've retraced, but again, it's quite a weak retrace. Look at that strong retrace there, strong retrace there. The first two, that was quite a significant one to the 20. That was a very significant one. This one's been less, but it's taken longer, but it's moved less because we might have run out of energy. Sellers down here at this point, so we've ran it at 20. But at the moment, we still remain short, or the market remains short. The Bollinger Bands, look at those Bollinger Bands, nicely angled. There's no like compression and volatility there. They're fairly equal candle size of the odd one, but we haven't varied much. We're under the 20-day moving average. We're in the bottom half of the Bollinger Band. Can't get over into the top half of the Bollinger Band. The parabolic, on the positive side, the parabolic SAR flipped here earlier last week, but it flips around quite a bit, the parabolic side, when we're going down. The fractal lows still up, highs are still moving down, but again, the angle of the move is sort of flattened out as we've flattened out here. So again, we might want to zoom into this now and see what's going on. So we've got a floor here, definite floor here on the daily time at 108. 1.810 floor here. We need to close underneath the next close. And it might just do that anyway for get up there. But at the moment, that remains short. Big resistance is at 185 all the way up here, and then the 50 period here coinciding with the Bollinger Band there all the way up there at 187.45. So don't panic. Just you might want to say, well, it stops moving for 1, 2, 3, 4, 5, 6, 7, 9, 10, 12. Now, two trading weeks. Lots of people panicking here. Hanif, my friend, that remains short. You probably didn't want all that story, did you, when you asked? But anyway, I need to go on. So the daily, still short. Let's go time. It's 4 hours. Over 50 period, could hold it down the high, lower lows. So again, the lows, interesting. The 4 hours is quite weak as well. See how the dotted parabolic stars chopping around as we move around. So we're under, then we're over, under. It's the choppiness of the parabolic star. But as far as trending is concerned, the trending analysis, again, the great at the moment, the MACD moving down. So MACD remains negative, momentum is down. Parabolic star also negative. Zero line moving down. The momentum is gaining as the histogram RSI 40 is really tough for 40, but you know that's down. The 1 hour may have been more. The 1 hour again, is getting lower. That yesterday again. So our daily first to follow, though that we don't seem to get to this week is 184.5 on the 1 hour time frame. So sideways, fairly volatile. Tuesday, Wednesday, relaxing a bit, and Thursday here again. But okay, so 2 periods. It became a cap yesterday, and we rejected it again today. So again, to the down. So we go there and do the down again. There we go. What can I say? Very good, Sergio. Thank you very much. Anything you want to have a look at? What's happening themselves? Very good. Okay. So let's just recap. Now, so let's just recap the news. So we've had the major news was the Bank of England. No rate change. They've added £100 billion of stimulus. What does that mean in terms? What it means that the UK can use extra support. So it was an 8-1 vote. Normally, these things are in unison, but it's expected to be in unison. Sterling haven't fallen all day, but then it's gone back to trend. Quite well demonstrated with the Aussie results. Quite bizarrely major sterling crosses in daily time frame. So let's take them all back. Against Aussie against daily time frame against rally very strong reach now going back down again. Pound Swiss and one. Daily going down again. England down by Aussie. A long time down probably heavily cable rate. So here, sterling moved up earlier on to 128 earlier in the month, now we're moving back down for that week. So, and finally, euro pound daily. Time frame here for euro pound. We can see we broke the psychological 90 level earlier. Having the now moved down to 89.68. over R2, so it's a bit overextended. It's over R2, R3 today sits for the euro pound at 90. So good day. Pound traders, sterling remains under both sides of this trade, euro pound trade. Yeah, we're going to be also affected by the Brexit negotiation. So, good for both sides economically to their deal. So we'll see where this goes from 90 the key, what 90 is what euro pound. So let's go back to the cross again. Profiles. I'll wrap it up if anybody's got anything else they want to have a look at or anything else they want to say. Say the pound CAD was quite a mover when we got that data at half an hour ago. So let's have a look at what that's turned out like. So euro on the day is again airing to the downside. We're back, as we said earlier, under 12.40, 12.28 at the moment, and we spiked as low as 112.13. So testing that low from yesterday as well. So that's pressured the downside. Dollar yen continues its decline we were looking at before, under 107, under the S1 again, 106.80 currently. So doesn't the low of earlier today could be tested again for dollar yen. Sterling, we've mentioned sterling many times. You see that trend continues. We're currently at 124.50, so we're under the psychological 124.50 at the moment for sterling traders. Aussie gave up 70 a few weeks ago. We've recovered this week over 69, and we're sort of pivoting through that again. And you see the psychological 69 level and the 200 intraday, one at the 200-hour moving average, flatlining there at 68.85. So that's a key supply rate. At the moment, we're under that. So Aussie big as well from the Australian economy earlier today. I didn't mention that earlier, did I? On the Australian dollar earlier, as we saw, we ran into S1 at 68.50, and we're back down there now with 30 minutes to the cash open in the United States. So don't get a bit of a bid here. Kiwi, similar sort of traction, recovering to 65 earlier in the week and moving down and hanging on to a 200-hour average here at 64.50. Not as negative as the Australian dollar, the Kiwi, but we got support, which we've tested already today at 64.30. Dollar CAD we talked about. Swiss franc under its 200-hour moving average most of the week. So here, Monday we spiked over it. Friday we spiked over it. Here over the key 95 level, but we've again another one we've pivoted through 95 this week. Down to the downside, and again, I should have mentioned this earlier as well. The Swiss National Bank had their rate statement, and again, as ever, very candid. The Swiss, especially the Swiss for a national bank, they're very, very candid. Again, openly admitting they intervene in the foreign exchange markets much more candidly than any of the other major central banks, but very much not afraid to say they get stuck in. And if we look at the daily time frame for the dollar Swiss, you can see the effects of the bank. They don't want a strong Swiss franc. They were happy to see it, all the way down here at. They weren't happy to see it all the way down here in March at 92. 97 was a key sort of pivot area we'd been through for many months and weeks. We came back to that for April and May, and then the dollar's weakened against the Swiss franc, and I wonder why, into the end of May and through to June again. So we're moving back down again under 95 currently, but that's our new pivot. So interesting tones from the Swiss National Bank. Confirmed again their keenness of negative interest rates. Interest rates confirmed at minus 0.751%. So it's been a very busy day, and again, I'll finish with gold and oil and the equity markets. And let's go to Bitcoin. I'll have a look at Bitcoin as well. And let's say the Philly Fed index was much better than expected. The gold market, volatile day again today. Not clearly sure what caused this candle here particularly, but that's the gold market can be like that. So you've got to be careful trading gold. But again, really sliding sideways, pivoting through, and getting finally support at the 200-hour moving average down here at 17.20 today. But 70, as I said earlier, 17.25 key for me going forward. Oil. Earlier this month, we've tried to have a go at $40. It's given up the ghost, and we've moved back down. If we take this to the daily time frame, I don't know how many oil traders are out there, but certainly we've need to get over this $40 a barrel to fill the gap we had here at the beginning of March. We gapped at $42, so $40. Big line in the sand. That's where the next resistance sits, $40 and the $42 level, where the 200-day moving average is for US oil traders. Intraday, we've come back to pivot through $38 this week, Tuesday, Wednesday, and today. But as you can see, the highs are getting lower, although we seem to have some significant support by the 200-hour there. So support comes in here just under $37 now at 37.95. Our resistance is coming down, and we're now sits at 38.58. Inventories again surprised this week, Tuesday and Wednesday, with the build. Remember the other thing, we're now into hurricane season in the Atlantic as well, so that can affect the Gulf producers, the Gulf of Mexico producers for the US as well. So anyway, just a little caveat on that. But anyway, that's gold for you. So thank you for watching, everyone. We'll see you all again tomorrow. We'll have a weekly wrap up tomorrow. We do it again tomorrow to see how the week ends. We have a raft of retail sales data tomorrow. We have pounds, Canadian, and somebody else is issuing retail sales data tomorrow. I can't remember off the top of my head, but that's tomorrow, Friday. After remember, a big beat for retail sales data from the United States this period as well. So we'll see what comes of that tomorrow. So again, weekly claims again, 1.5 million. So it's not going down. It missed expectations. The continuing claims are also back over 20 million. The 4-weekly average now is at 1.7 million. So it's going up rather than going down. So yeah, not great. So third week of June comes to an end. It's the longest day over the weekend this week. So more on that perhaps tomorrow we'll touch on it. So I say tomorrow it's PPI from Europe, retail sales from the UK. Retail sales also from Canada, and the current account and the from the United States. And also, Chair Powell, having had 2 key testimonies this week, he's sitting on a panel with Mester, who a member of the Fed, who's a very key hawk on there. So we're interested in how those 2 come out of that encounter tomorrow. So lots going on again tomorrow as ever. So take care, everyone. Thank you for your time, and we'll see you all again soon. Let me just enable camera, bring that up. Disable camera, bring it up. There we go. So Abiola and everybody else that was here today, thank you very much for your time. I appreciate it, and we shall see you all again soon next time. So take care, everyone. All the best. Trade carefully.